Okay, okay, okay. Okay, 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 okay. So now we're recording, and the question was um, if you could explain your background and the process of becoming a self-taught angel investor.
Yeah,
So yeah, you can go on.
yeah. Sure, Theo. So I guess a bit about my background. I actually did grad school, did my MBA in 2013 at INSEAD to make a very drastic career change. So prior to that, I was actually working in oil and gas. I was desperately bored, and I also had this view that in our lifetimes, in our generation, it's going to be an industry in decline. Maybe not purely a sunset industry, but in decline. So it didn't make sense for me to stay and build a career and a life in an industry that is in decline, if that is your outlook. So I went to grad school to basically reinvent myself, and I knew I wanted to work in tech. That was the general direction. And I didn't know much more than that. And so I made a series of steps career-wise, doing corporate strategy and then moving to corporate entrepreneurship and innovation. And then ended up using that role to work with a lot of early stage startups through partnerships and different things like that, and basically became a venture builder. Um, the last venture I worked on was an API marketplace. So think of this as an app store for API services for software developers. So if you're a
Nice.
developer, you're building an application, you can use all of these great third-party APIs instead of developing and coding from scratch.
Yeah, yeah, very nice, very nice. So basically, you decided to go in tech, but did you have like some tech background or tech studies in the past, or you just like?
None.
And how did you make this transition? Like, I mean, because the world of startups is, I mean, I think for all young people, a very attractive industry, right? Also for myself, and I mean, but there's not a really clear journey to like break in into the startup ecosystem, right?
Yes.
So I mean,
How
precisely
how do you
how?
do this? Yeah.
Yeah, exactly.
I would answer this question a slightly different way, right? So let me explain that. If you think about the world of your education and going through school up to university and then the professional world, there's something like very weird in my view of like how these different worlds are managed. When you're going through school, every single year you progress, you learn different subjects, you're tested, and you're expected to perform all the way to some standard in order to progress, right? So there's this
Yeah, right.
constant challenge across different topics, and you need to perform on all of these things to some degree.
Yeah.
Something very strange happens when you go into the professional world, right? Generally speaking, the professional world says to you, you should pick an area, pick a lane. You should stay in that lane and go deep and develop expertise. And the professional world rewards you, right? You get career progression, you get a bigger salary, you go up in seniority by staying narrow and going deep.
Yeah.
So it's a very different way of thinking, very different reward mechanism. Um, and so the problem is that as people, it's human nature, right? We evolve, we want different things. And at some point, what you want to do, it's going to diverge from what your work gives you.
Yeah,
I
exactly.
think this is a big source of dissatisfaction for people. I mean,
Mm.
fundamentally, my belief is that we learn every year as young people up to a certain point. Why is it that when you get to the professional world, I wouldn't say stop learning, but your field of learning needs to be restricted. It's
Yeah,
very
exactly.
unintuitive for me. So I guess I believe in my ability to learn and evolve and to be persistent and hungry. And I trust in that ability to like learn and to be able to perform in different environments. Um, so that's kind of like my view of the world, right? That whatever you want to do, I'm not saying that it's easy, But if you apply yourself and you have to work for it, then it is possible, right? And so that's kind of my answer of like, how did you do it? I think it really starts with your kind
Yeah,
of
yeah,
like
yeah.
the mental side.
Yeah, I, I'm especially in a world like with the job market that is always changing. I mean, in the last few years, where I mean, maybe an industry is booming and everybody says, "Ah, you should go to work there," and then in a couple of years, I mean, couple of years, you have to work for a lifetime if you specialize in an industry. So, a couple of years could be also like 10 years. And then, I mean, there's a new industry and that gets replaced. So yeah, I mean, I think that having a more diverse field of like knowledge is a very good idea in the today's world.
Uh,
Um,
I agree. I mean, the challenge is that the professional world generally doesn't reward you for that, like financially.
mm,
Unfortunately,
mm,
right?
mm.
This is the reality.
Yeah, yeah,
While
yeah,
there is benefit to those skills, the compensation structure says don't do that because you're not going to get paid for it, which is a little bit sad.
yeah, yeah, exactly. So now talking about this idea of angel investor syndicate. Um, I saw some of your posts on LinkedIn, and yeah, I would like to discuss more this idea because I found it very interesting. And so basically, the first question is, what are the advantages um, to having an investor syndicate for an angel investor?
Yes. So if you think about the journey of being an angel investor, right? I've been through this, and most angel investors, this is the common journey. The analogy, Theo, is like this. It's like saying you want to be good at playing poker, let's say. You then go ask your friends who know how to play poker, hey, what's the rules, right? What is a full house? What is a flush? Whatever. And then you walk in the casino, you take your money, you buy chips, and you start betting. That is how you learn. I've been through that, and most angel investors who want to do this, if they haven't had a chance to work professionally in VC, you need to use capital to learn, which makes it very expensive,
Yeah, of course.
right? So the idea with a syndicate is that ideally somebody you trust and is more experienced, their job is to go out and find the deals. They do the diligence, they package all of this up so it's efficient for you, and they share it with you without charge. And basically, if you would like to invest, it makes that easier because somebody has done the heavy lift for you. And all you have to do is to make a decision. But you do give up something, right? Because nothing's for free in this world. And so usually what you end up giving up is something called carried interest. Think of it as profit sharing, which means that whatever you invest in, if there is a profit, the syndicate lead is going to take a percent, commonly is 20% of the upside. So that
Okay.
is kind of like the structure.
So I mean, the fact is that as you explain it, I mean, it looks kind of similar to, a normal VC, right? Except that, I mean, it's not a real company, right? I mean, what
Uh,
are the differences between a VC and a syndicate?
sure. There's a few difference. One difference is the check size, right? To
Yeah.
invest in a VC fund, at the very, very low end, it might be $250,000 check for a very small fund, and it can go up to tens of millions. So I don't know how many friends you have who can like write that kind of capital, right? So generally speaking, it's not accessible for most investors.
Okay.
So that's one issue. The second issue is that if you invest in a VC fund, it's a passive vehicle because the fund manager is the one who is looking for the companies, doing the diligence, and making the decisions. So you as an investor, you're completely hands off and outside of this process. At the end, maybe you know some of the companies they invested in, that's it. So I think, it's one of the drivers for people who want to be angel investors. You actually want to learn,
Yeah, yeah, that's true.
right? Which is why the syndicate model has a benefit of like you being active because it's like having somebody doing the heavy lift for you, but ultimately you get to see the diligence and you get to decide for yourself, does this make sense or not? Should I invest in this? And you take ownership of that decision.
So, when you want to decide to invest in a company while you're in a syndicate, um, like all the investors should move together, or maybe if you don't trust a company, you can say, no, I'll just step out for the in this case, or I
Exactly.
mean, there's like some voting or something like that. You
So
can step out.
everybody gets to decide. You can invest in all the deals, none of the deals, or anything in between.
Okay. Um, And for startups, what's the difference between be funded by a syndicate or by a VC firm?
Sure. Well, one is, I guess, the perception of prestige, right? Startups will talk about being venture backed, which means a VC fund has invested in them. People don't really talk about being backed by angels or syndicates, right? There is
Yeah,
some perception difference. Whether you agree or not, this is the
yeah,
reality.
that's true. That's true.
The other difference is that the check sizes tend to be different. Okay, so if you think about the different types of investors, angel investors will write 4 to 5 figure checks, maybe 2,000 on the very low end, up to like 5, 10, $20,000.
Hmm.
Syndicates, the sweet spot, generally speaking, is you should be writing at least 6 figure checks, at least $100,000 checks. VCs will tend to play half a million up to millions of dollars. So there is a check size and a stage difference. So I will say that for what I do, right, my great experiment is to see how big and how quickly, how can I push the state of the art of what it means to run a syndicate, right? So as you can already tell that we are operating at a scale that's far beyond what people think of as a syndicate because we're not 1 or 200 angel investors. We are 1,300 angel investors at this point. The biggest check that I've written into a startup is 1 million plus. So we're basically writing check sizes that are comparable or even larger to smaller VC funds. And so the question is, okay, we know this is possible, but how far can we go? Can I be writing $2 million checks, $5 million? I don't know. Right. So this is kind of like my experiment.
Yeah, yeah. And what was the company that you wrote the $1 million check?
I won't say publicly on
Ah, okay, okay, okay. Yeah, 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 of course, of course.
yeah,
Um, so, and instead, maybe, um, I saw that you have an angel school, and
yeah.
is this, I mean, is the syndicate what you're referring to, or something else?
We do have a syndicate. The syndicate is just branded as the Angel School Syndicate. Um, Angel School is really a venture education business. Okay, we operate a few different programs to help newer investors learn venture safely. And then we also have another program that is around syndicate building, which is what I specialize in. The mission of Angel School, Theo, is that we want to build the other side of the venture ecosystem. What I mean by that is if you think about venture, there's so much attention and support given to startups and founders, which obviously you need. You need to support founders because building companies is really difficult. But when it comes to capital, it's an afterthought. People think angel investors like fall from the sky. And then they just like they're like an ATM and they carry sacks of money and they just dump it on startups. Well, like I explained earlier, actually learning to be an angel investor is expensive, high risk. The barriers to entry are actually quite high. Not as high as it used to be, but it is relatively high. So part of the mission for Angel School, the education side, is how do we help grow the market for capital? Because in the end, we need to have balance, right? It doesn't matter if you have all the best startups in the world, but if there's no capital to fund them, who cares? Right? So that's kind of like the mission for why we do education programs.
Yeah, it's also, I mean, a very democratic idea, so I like it very much. And what I want to ask you is that what's like the barriers of entry to like getting a startup syndicate like as like yours, comparing to just like the barriers of entry for a normal angel investor that wants to invest by himself.
Yeah. So when a startup is raising capital from the different types of investors, right? Generally speaking, it goes by stage. At the very, very earliest pre-seed stage, they'll be going to angel investors, right? Then they get to seed stage. I mean, it does depend on the syndicate, but syndicates will tend to play pre-seed up to Series A. The VCs tend to step in like Series A and later. Uh, Generally speaking, I would say like the later you go, the more rigorous the diligence process is, generally speaking. Yeah. Um, yeah, so I mean, I think this is kind of like another argument for why I think angel investors should consider working through other syndicates as well. Because when we write bigger check sizes, we do a lot deeper diligence. We get a lot more information. And so we can make better decisions that way simply from the fact that we can write a bigger check.
Yeah, yeah, yeah. Yeah, that's very interesting. And so one other thing is it's not related to what I asked you before, but in your experience, what's like the standard way to become an angel investor? Like, for example, maybe ex-tech founders that now sold their company and became angel investors, or I mean, some other kind of maybe they came from a particular industry and then they started like this new I mean job.
Sure.
um,
Yeah.
so I mean, what's
Yeah.
okay?
So I don't think there's a typical career path. I mean, there's a few persona types. One is, I mean, angel investing is one of those careers. It's not really a full-time job. Most people are
Yeah,
side hustling.
exactly.
Either that or you need enough money that, you can afford to like risk it.
Yeah, yeah,
So it can be middle income, white collar professionals. They've established themselves in their career. They're saving money and they're like thinking about investing. They've done the traditional stuff, the bonds, the stocks, and now, okay, what else do I do? There's that group. It can be founders who have built companies and exited and they have enough wealth to do this. It can also be operators, people who have worked in startups, right? And they want to contribute and give back to other startups. So it's a mix of these things. I mean, what is common to all of these is that I think people who are drawn to this need to be driven by not just the risk and the reward, but also the intellectual curiosity to want to like give back and to invest in something that actually makes a difference. Yes, the financial return is a part of it, but it's also this um the mission of it, of giving back and actually, all these other drivers.
yeah, yeah. That's a nice thing, very nice thing that I think of the startup world. That I mean, it sounds a bit like cliche because every company says, "Ah, we want to make the world better," but really in the startup world, you're changing. I mean, you could be possibly changing the world and how it works, and really make it a better place. And yeah, so I mean, I'm really interested to this world. And so I saw that you are also a former startup operator. Like, what startup was it, and what position did you have?
Yeah. So the last venture was the API marketplace. So that was the one,
Ah,
right?
okay, okay, okay.
Yeah. I mean, another way of like thinking about like Angel School, it's also a startup, right? The education business. And by the way, a completely bootstrap organization, right? It happens to be related to the investing career that I have. And there's obviously benefits around how they feed each other, right? But that itself is a startup. I would consider it so. Yeah.
Okay, nice. So, yeah, I think that I finished my questions. So, I mean, it has been a very nice experience for me, but I don't want to steal more of your time. Uh, so, yeah, I think that we can end the call here.
Sure. Thank you for reaching out, Theo.